Have you ever dreamt of retiring not just comfortably, but extravagantly rich? What if I told you that the key to that dream lies in decisions you make today, in your youth? Welcome to our special guide, How to Invest Young and Retire Rich. In a world where financial freedom seems like a distant dream for many, we're here to show you it's more attainable than you think. It's not just about earning more, but about investing smartly and starting early. Let's start with the magic of compound interest. Albert Einstein called it the eighth wonder of the world, and for a good reason. Compound interest is your best friend when it comes to building wealth. We'll show you how even small investments made today can grow exponentially over time. If you invest just $200 a month starting at 20, with an average return of 9%, you'll have over $1 million by 60. Delay this by 10 years, and you'll need to triple your monthly investment to catch up. Start young, and time becomes your ally. Before diving into investment strategies, it's crucial to set clear financial goals. Your goals, whether it's retiring early, traveling the globe, or owning a dream home, serve as your roadmap. They define your investment horizon, risk tolerance, and how much you need to save and invest. For example, aiming to retire by 50 requires aggressive saving and investing early, while traveling might need a short-term savings plan. Each goal influences the type of investments you choose, guiding you in allocating your resources effectively. In essence, knowing what you're striving for financially shapes every decision on your investment journey. Investing can seem intimidating at first, but it doesn't have to be. Stocks represent ownership in a company, offering potential growth, but with higher risk. Bonds are like loans to governments or corporations, generally offering lower risk, but also lower returns. Mutual funds pool money from many investors to buy a diversified mix of stocks, bonds, or other assets managed by professionals. ETFs, exchange-traded funds, are similar to mutual funds but trade like stocks on exchanges, offering flexibility and diversification. Grasping these fundamental investment types empowers you to make informed choices, balancing risk and reward according to your goals and comfort level. Diversification is a key strategy in investing. It means spreading your money across different types of assets like stocks, bonds, and real estate instead of putting it all into one. By doing this, you reduce the risk of losing all your money if one type of investment performs poorly. Diversification can enhance your long-term returns, because when one asset class underperforms, others may do well, balancing out your overall portfolio. It's like not putting all your eggs in one basket. If one egg breaks, you still have others intact. Diversifying your investments is a smart way to manage risk and increase your chances of financial success. And don't forget about risk management. It's crucial to protect your investments with strategies like asset allocation and periodic rebalancing. Maximizing your retirement accounts like 401ks or IRAs can turbocharge your wealth-building journey. These accounts offer tax advantages that can boost your savings over time. By minimizing taxes, you keep more of your hard-earned money working for you. It's like having a financial sidekick that helps you grow your wealth faster. Investing in assets like stocks, real estate, and businesses is essential, but investing in yourself is equally vital. Continuous learning and skill development are pathways to increased income and improved financial prospects. Think of your knowledge as a valuable asset that appreciates over time. Just as you expect your investments to grow, your expertise and skills can yield higher returns in the form of better job opportunities, increased earning potential, and entrepreneurial success. The more you invest in yourself through education and personal development, the more you position yourself for long-term financial success and the fulfillment of your goals. Your self-investment is your greatest asset. Retiring with wealth isn't a quick race, it's a gradual journey. It demands discipline and patience. Markets have their highs and lows, but the secret is to remain steadfast. Avoid making impulsive emotional choices and stick to your long-term investment strategy. Keep in mind the market favors those who exhibit patience. By weathering market fluctuations and staying committed to your financial plan, you give your investments time to grow and recover from setbacks. This steadfast approach is a proven way to build substantial wealth over time, ensuring a secure and prosperous retirement. Patience is your ally in the world of investing. So there you have it, The roadmap to retiring rich by investing young. Start today, stay disciplined, and watch your wealth grow over time. The journey may be challenging, but the rewards are beyond your wildest dreams. Thank you for joining us on this inspiring journey towards financial freedom. If you found this video helpful, please give it a thumbs up, share it with your friends, and remember to subscribe for more valuable content on building wealth and living your dream life.